To build anything that truly lasts, it takes time.
Ashi Anand joins in on the show right now. Ashi, hi, good to have you on the show as always. Good afternoon. What is it that you're making of this uptick on the consumer durables sector today? Seems like a little late in the day considering all that the government has been doing. The effect on the stock markets at least should have happened much earlier.
Sure. Hi. Firstly, thanks so much for having me on the show. The broad way we really look at markets is I think markets are in a bit of a wait and a watch mode. You don't really have clear direction in terms of what parts of the segment are, or what parts of the market are likely to drive the next big up move. So if you kind of, as in specifically on the question on consumer durables, a very big important or the one big positive of the year so far is the fall that we've seen in interest rates with 100 basis points cut in kind of interest rates that does free up a certain amount of household kind of income that was going towards EMIs, which is now kind of available for discretionary consumption. And kind of consumer durables fits very well within that kind of overall space. So I think in the context of an overall market where you are still kind of trying to see and identify what direction the markets are going to take, you have these economic cyclicals which did very well over the last couple of years, but you basically now have a very high base and growth of that base is still not very clear. You have uncertainties on the global front. You have banking, which is like to see some amount of pressure in the near term. I think within all of that, consumer is operating as a bit of a safe haven. And with rural consumption starting to come back and with hopes of urban consumption coming back, with interest rates coming down, I think that's where you're seeing some amount of movement in the space.
All right, so that's about the consumer durable space with just a few minutes left. So let's also get you some of the tradable ideas from both of our experts. And Vinay, you go first. Tell us which are your stock ideas right now?
Yeah, so I would pick one from the consumer durable space or you can consumer electric segment, which is VGuard. So VGuard has given a nice breakout on the charts and looks very strong on the today's volume is quite convincing. So VGuard around 394, 395 can be bought. I would suggest a stop loss at 385 and I'm expecting a target of 415 in next 3-4 trading session. The second pick I would take from the FMCG space. So FMCG has started performing today and it has underperformed in this year till date, and now I am expecting that mean reversion could come and this sector will also perform in this market. So overall Dabur India looks very strong from the FMCG space, so Dabur can be bought at 491. I am suggesting a stop loss at 480 and on the upside I'm expecting a target of 510. So these are the ideas for next 3 to 4 trading sessions.
Okay, so those are Vinay's picks right now, both from the consumption basket. Jatin, coming to you, any names making it on your radar from consumption?
Hindustan Unilever is one which we have picked. So we believe that on the daily charts there is a trend reversal. So we believe on the upside there is a scope for the stock to move towards 2385 from a short-term perspective. So HUL is a buy. Stop loss should be placed at 2290. Another stock that we have picked up is NTPC. So NTPC, after a sustained decline, is showing signs of a trend reversal, trading around crucial Fibonacci supports from where the buying interest is kicking in. So we believe that NTPC also can be bought from a from a 1 week perspective. The stop loss should be placed at 328, and on the upside we are expecting 348 in the case of NTPC.
That's that and some of the individual stocks, but what's also been sensitive is the Nifty rejig contenders today, and that's likely to take place since September end. What are the likely inclusions and exclusions? Varun is here with that list.
Well, so the Nifty semi-annual review will happen in the month of September, the cutoff date for which is the end of July, and the announcement is expected to come in the later half of August. Now, Nuvama has come out with a report wherein they are highlighting the probable changes that could happen to Nifty 50. So there are two stocks which could enter the Nifty 50 index, that is Interglobal Aviation and Max Healthcare. And if Max Healthcare is included, it could actually imply passive buying of around $400 million into Max Health. But they say that the only scenario where Max Healthcare may miss the inclusion is that if HAL, that is Hindustan Aeronautics, outperforms Max Health by around 12% immediately, an outcome for which they say is actually has a very low probability. Also, they say that the two stocks that could actually be excluded from Nifty 50 in the semi-annual rejig are actually Hero MotoCorp and IndusInd Bank. They have also made their comments on BSE Limited because earlier it was understood that BSE Limited could also enter Nifty 50. So, Nuama says that as per their calculation, there is zero probability that BSE Limited would enter Nifty 50 at least in the September semi-annual rejig. So, there are no chances that BSE Limited would enter the Nifty 50 in the September review. Interglobe Aviation and Max Health has the highest probability of entering Nifty 50, and Hero MotoCorp and IndusInd Bank will actually be included from Nifty 50 in the semi-annual rejig.
All right, thank you so much, Varun, for getting us all those details. So as we move closer to that date, more clarity will definitely kick in, and maybe some adjustments with respect to the passive flows can also take place. But Ashi, just wanted to have your take on some of these brokerage related counters, because just today we have a news flow saying that Motilal Oswal AMC has actually crossed 1.5 lakh crores in AUM, and you can see the excitement in the stock. And Ashi, this theme has been playing well in the markets of late, because with this whole thing happening with financialization of saving, rather, there's indeed a lot of interest with respect to the stocks as well. Give us your sense. How do you see this particular theme? Are the valuations justified with the kind of growth that the companies are posting?
Yeah, so financialization of savings is, according to us, one of the more interesting themes to play over the kind of coming decade. If you just look at penetration levels across financial products in India, compare them to any other kind of emerging country around our scale, some of the more developed nations, etc., there is just tremendous scope for kind of a shift of financial savings away from traditional fixed, away from traditional real estate, fixed deposits, and gold, and towards kind of the kind of financial markets. I think when you are looking at playing this theme, you do need to kind of be a bit careful in terms of what parts of the theme you are playing in. So this is a space that we are quite actively, that we do quite actively have in our portfolios. What we do quite clearly like are wealth management, asset management plays. We see these as just direct plays on the kind of growth of the wealth and asset management sectors in India. Brokerages is actually a place we are a bit slightly more cautious about. It is important to understand that a very large amount of the growth that you've seen in brokerages post-COVID has come from highly speculative F&O trading. And this is a space that this regulator is very clearly clamping down upon. They have already introduced various measures, and they could introduce further measures. And you have seen quite sharp declines in overall F&O activity. While you're going through this regulatory upheaval, you want to possibly just stay away or be a bit careful about exposures to kind of brokerages, especially in terms of how much you're paying. But wealth management, asset management, insurance, these are all kind of segments that we believe are very attractive, that we hold reasonable parts of in our overall diversified portfolio. Brokerages also could become quite interesting, but we just have to wait to see as the current regulatory kind of environment shapes up.
Okay, so that's the take on the entire financial theme and the capital market theme. But let's talk about banks in particular today and other stocks from the financial basket on the back of this Macquarie note that we've seen today. And two stocks that stand out on the back of this Macquarie note today are IndusInd Bank and Kotak, both seeing significant downgrades to their ratings. And for IndusInd Bank, the target price has been slashed from 12.10 to just 650 rupees per share. Surprisingly, the stock has made a recovery from the day's low. But when I on the charts, what are you making for both of these stocks, Kotak and IndusInd? Because Macquarie's note looks rather negative.
So Kotak Bank has been correcting for last 5-6 sessions, and recent high was 2233, and now it is trading around its 50 days EMA, which is placed at 2125. So definitely it is a zigzag kind of pattern. There is no clear cut direction, but the overall strong support I see around 2100. 2100 happens to be the previous swing low also. So I feel that unless and until this level is breaks, there is hope that again in the coming session it will bounce back. So no doubt I'm not recommending any long trades right now. It is going weak, but it could come down towards 2100 and try to find out the support that we need to track. But as of now, there is no trade in the Kotak Bank. As far as IndusInd Bank is concerned, IndusInd Bank is relatively doing better and placed above all in key moving averages. So recent performance has been good, and I think there is a strong support around 825 is a positional support. With that stop loss, one can continue to hold on to the long position. So yes, relative strength is there, and IndusInd Bank on the short term chart looks better than Kotak Bank.
Let's check in on PNB as well. The global advances saw an uptick of about almost 9.9%, standing at right now 11.3 lakh rupees. That's what the quarterly update indicated for PNB. Ashi, what is it that you're making of this surge that one is seeing, or catch up, whatever you may want to call it, in the entire PSB space? That's the PSU banking space. I mean, for long, it's ICICI Bank and HDFC Bank, along with Kotak as well, sporadically, which have been the market favorites. What's the take now on PSBs?
So I think catch up is probably a good kind of word, right? And if you're just looking at kind of the relative performance of the traditional high quality franchise private banks versus PSU banks, what you have seen is over the last 2.5 years, there was a very interesting catch up that actually took place. What happened is that historically, and you just have to go back a bit. If you go back 4 5 years, there were large corporate NPAs that your PSU banks were actually recognizing, while your private banks had very, very clean chits, right? So if you were looking at the relative performance, you'd have private banks growing at 20-25%, pristine NPAs, high NIMs, high profitability, and these were trading at kind of 2.5, 3.5 times book. PSU banks were struggling with asset quality, were struggling with capital, were struggling with growth, and were actually trading well below book. So now, over the last couple of years, you have seen a clear narrowing both of performance and of relative valuation. So kind of some of the PSU banks, which were trading at almost 0.5, 0.6 times book, have moved back towards book value. You have your private sector banks, a number of them which were closer to the 3 times multiple, having moved back towards a 2 times multiple. This kind of collapsing of the difference in kind of relative valuations has also been kind of accompanied by a reduction in the kind of relative outperformance. So PSU banks have come back in terms of overall growth, asset quality is fine, is no longer a concern. But if you're just looking at where they stand as of right now, we kind of believe that both private banks and PSU banks are kind of optimally valued. You may get pockets of under and outperformance from a shorter term perspective. But just from a longer term perspective, I think the large catch up that PSU banks had, that is largely over. There may be certain stock specific names which may be a bit more interesting. SBI does kind of stand out amongst the stock specific names. But I think in terms of just relative performance and this big catch up that you've seen over the last few years and possibly also in the near term, I think that part is largely done. And we continue to kind of see higher quality private sector franchises as more attractive longer term buy and holds.
Okay, so that's a take on the entire banking and financial space. But let's just focus and talk about metals. Nifty Metal is one of the sectors that's deep in the red today. But from that also, Tata Steel is in focus from that pack on the back of their AGM that they held yesterday. Tata Sons chairperson N. Chandrasekaran has reiterated focus on cost optimization and operating efficiencies among other focus points. My colleague Ashesha, who tracks the sector closely, is here with more highlights from their AGM. Ashesha.
Well, yes, some important commentary that has come in from Tata Steel chairperson N. Chandra, especially with respect to transitioning to green steel. First up, let's talk about their UK operations, where he said that they've progressed towards low emission steel making. They decommissioned 2 blast furnaces in Port Talbot last year, and they are transitioning to state-of-the-art electric arc furnace, which is likely to be completed by FY28. As far as the Netherlands operations are concerned, the company continues to remain in discussions with the Dutch government in order to get some kind of assistance for transitioning to green steel. They say they also launched a cost reduction program. Now remember, the cost reduction program is across geographies. Total consolidated cost is likely to come down by about 11,500 crores in FY26. India is likely to contribute about 4,000 crore cost reduction. UK is likely to reduce cost by about 3,000 crores, and Netherlands cost is likely to come down by about 4,500 500 crores. He also said that they remain confident that the transition in green steel making in UK and in Netherlands is likely to complete as per plans in the next few years. So some commentary that has come in with respect to green steel transition, especially in Netherlands, which is in progress, and for UK they are in conversation with the Dutch government, and the cost reduction plans that the company has come out with. The stock in focus on the back of this.
Okay, that's Tata Steel, which is currently in focus and has been an active mover all through today. We're pretty much winding down for the day and we're not quite closing at the session lows. We've resurrected from there, but it was pretty much the same pattern as we had in trade yesterday. We're closing in mildly soft around the 25,400 thereabouts print. Nika, PNB, Interglobe Aviation, NBCC, NCC, ICICI Pru Live, these have been your session laggards today. Ashi, before we let you go, just your thought on whether or not you're adding any positions in the current market?
We are kind of selectively doing so. I think the two main things that we're really watching out for as we get into the corporate results season, we are trying to kind of look for indications of where you're likely to see growth recovery and where the growth recovery is likely to be a bit more front-ended. I think that's the one key direction that we're really looking at, and we're going to be watching quite closely over the kind of coming corporate results season. We also hoping that over this result season, we'd also know what Trump is really doing in terms of tariffs across the world. It does make it quite a difficult investing environment where you don't really understand what's going to happen in terms of global demand and relative positioning of India versus other kind of economies. I think as we get greater clarity on these two elements, the growth recovery and what's happening with Trump and trade, we are very clearly looking at deploying more capital. We don't have too much cash at the point in time. We just have about 5% cash in our portfolios, but we'd be looking at getting fully deployed as we get some clarity on these two elements.
Okay, so that's Ashi's stance on how to approach the market right now and how they are positioning their portfolio. But Ashi, on that note, we'll let you go. Appreciate you joining us on the show this afternoon. But before we start winding down for the day, Jatin, just give us a sense of what kind of levels you're expecting to see at market open tomorrow for the benchmarks.
Yeah, see, overall, if I have to sum up today's session, it has been a little disappointing. We believe that there could be a mild negative opening in tomorrow's trading session. And if we open below 25, 375, 25, 380, then I think the selling pressure is likely to continue in tomorrow's trading session as well. So we are a little bit cautious for tomorrow's trading session. Crucial levels are 25, 380, and on the downside, it can extend towards 25, 200.
All right, Jatin, with this, we'd like to thank you for taking the time out and speaking with us. So